Welcome to my YouTube class. Today we are going to start financial statements. This is the chapter where you're going to understand three statements together. Okay. Good morning, all of you. Khushi, Indra, Shakti, Abhishek, Balmiki, and Akbar, Priyanshu. Good morning, all of you. So today we are going to start with chapter 21. Okay, financial statements. Good morning, Dipanshu. So, what is the basic reason of preparing a financial statement? In class 12 we are going to do one chapter that is known as non-profit organization. Okay, so the profit making organizations, okay, they prepare a statement that is known as financial statement. Under this financial statement you have trading account, profit and loss account, and balance sheet. Okay, so all the profit making organization. So who prepare financial statements? If the question is asked to you, you will say financial statements refer to those statements which report the profitability and the financial position of the business at the end of the accounting period. So, only those statements which tell you about the profitability and the financial position of the business at the end of the accounting period are known as financial statements. Okay. So, you will remember that what is the objective? Main objective is to present a true and fair view of the financial performance, profit and loss of the business. Okay, so one more thing, children, I will say that when you do these financial statements, okay, you have to come across two things. Three statements are there. What I said, I told you, you have to learn the format. If you have done it already, the matter is different. But those who are learning today new, I will tell you that you have to learn three things. Okay, see, who are the users of financial statements? Which people use these financial statements? They are the management, okay, then the investors, the creditors, both the long term as well as short term creditors, they are also using, and the employees. Okay, so these people, they are the users of financial statements. So you can get one short question from here. Name two users of financial statements. So what you're going to write? You're going to write management, investors, or creditors, whatever you like. Okay, next thing is, see the income statement. Okay, so this income statement is divided into two parts. The first part is known as the trading account, and the second part is known as the profit and loss account. So all the expenses, all the direct expenses, you can say the manufacturing expenses which are directly related to the factory are recorded in the trading account. Okay, and all the indirect expenses, okay, which are related to the office, they are recorded in the profit and loss account. Okay, so without wasting any time, straight away we will go to the preparation of trading account. So see, what are the things which are coming under trading account? First thing, the first thing which will be written in the debit side, we are going to start the sum with the opening stock. Okay, opening stock is the first thing. Next you are going to write purchase, and you know from purchase obviously we have to deduct purchase return. Okay, next it is direct expenses. Okay, next you have wages. Under direct expenses you have wages. Okay, then you have carriage inward. Carriage inward or freight inward, these two things are in the direct expense. Okay, next you have manufacturing expense, stores consumed. Okay, stores consumed means whatever is required, like engine oil, okay, oil, grease, which are directly related with the production, those things. Okay, dock charges is there, then you have royalty. So these are the items, okay, which are going to come in the debit side of the trading account. Okay, then what items will be written in the credit side? Credit side, very less items are written, you know, only two items. One is sales, and from sales you deduct sales return, and the last item is closing stock. Okay, so closing stock is the last item of the trading account. Okay, so without wasting any time, let's see the format. See, the format is given in your book. Turn your format. All those who are attending the class, give me your attendance. Come on, hurry up. Start writing present, ma'am. Those who are there in the class. Format of the trading account. See, you have opening stock. Okay. Then you write purchase. From there, you will write less purchase return or return outward. Okay. Don't confuse children. Purchase return and return outward are the same things. Okay. Next, it is wages. Okay. Wages and salaries. Then you have direct expense. Then you have carriage, carriage inward also, carriage on purchase. These three things together, okay, has been written. Any one item you can get for trading. Next, you have gas, fuel and power, freight and cartage. Okay, manufacturing expense or productive expense. Okay. Next, you have factory expenses. Okay, what is factory expenses? Under factory expenses, see, factory lighting can come. Anything which is related to factory, like you have factory rent, factory lighting. Okay, these things will come in the trading account. Okay. Next, you have dock charges and clearing charges. Then you have import duty or custom duty. Now last, it is royalty. Okay, so these are the things. So one thing you have to remember here, keep in mind. Okay, see here, wages and salaries is given. Okay, you, if you have only wages, you will write in the trading account. If you have wages and salaries, then you are going to write in the trading account. Okay, but you, if you have just the opposite, salaries and wages, then you will write in the PL account. Okay, keep in mind. Next, you have sales. Okay, from sales you are going to write less sales return, and sales return is same as return inward. Okay, and closing stock. These are the items. When you write all these items, then what you are going to do? Okay, Deepika, no need to feel sorry. We are just in the, okay, we are just on the format of trading account. Once more, I am repeating. So this is opening stock. Okay, opening stock is there. Then you will write purchase. From purchase, you will deduct purchase return. Then you are going to write wages. One important thing I told here is when you have wages and salaries together, you will write it in the trading account. But when you have salaries and wages, then you are going to write in the PL account. Only salaries if you have, then also you will write in the PL account. Okay. Then you have direct expenses. Carriage inward and carriage on purchase are all same. Any one item, if it is there in your sum, you are going to write it in the trading account. Okay. Then you have gas, fuel and power, freight and cartage. Manufacturing expense is same as productive expense. Okay, so these things are there. Then you have factory expense. In that, what is there? Factory lighting and factory rent. Okay, next you have dock charges and clearing charges. What is this dock charges? You know, ships are there, no, in the harbor Visakhapatnam, you have heard, shipbuilding industry. So there, you know, big ships are coming. So lot of trading, lot of business is happening, not only through roadways and through aircraft. Okay, some business, big business is happening through waterways. So water transport, you know, ships are bringing the big cargoes. So those, when they are there in the port, then they have to give a type of charge that is known as dock charges. Okay, clearing charges. Then you have to pay custom duty, import duty. These are all related to business. Okay, business means when you are doing shipping business. Okay, then you have royalty. Okay, what is this royalty? Royalty is a payment which you have to pay. Next, when you do all these things, then what you do, you have to add the trading, all the items you have written. Now see, come to the credit side. Most of the time what will happen, your credit side will be more. Two items will be there, sales and closing stock. Still your credit side will always be more. So when it will be more, then you will add all the expenses, all the expenses that you have written in the debit side. Okay, and from the credit side you will subtract the debit side, and then what you are going to get? Gross profit. Okay, so this gross profit, when you get, you will write transferred to PLN account balancing figure. Okay. So this will happen out of the 10 sums you will do 8 sums you are going to get gross profit. But in some cases, there are always some of the other exceptions to the rule are always there. Okay. So sometimes it can happen that your debit side is more. Your debit side is more in the examination hall. It can happen. Okay. So don't get confused or very much in tension, don't go. Okay. So when your debit side is more and your credit side is less, then what will happen? From the debit side you will subtract the credit side and then you are going to get gross loss. Okay. Gross loss happens very rare. Out of 10 sums, maybe 1 or 2 sums you will get, but most of the sums that you do, you are going to get gross profit only. Okay. So gross profit only you get. Okay. So the gross profit one thing is clear. Now let us do one sum. Okay. Illustration one, let's do. So see here they have told you to prepare one trading account. This is the entire format. Children, you have to learn the format. Then you can solve the sum very easily. Okay. So see, we are going to discuss the first sum. What I said, we are going to start the sum with opening stock. Okay. So in the trading account, in the debit side, the first item that you will write will be 2 opening stock. Okay. All the items that you write in trading as well as PNL, you have to write. Children, don't forget to write this 2. Okay. 2 has to be written in the debit side and buy will be written in the credit side. This is very important. You forget, you just write opening stock, purchase, less return. That is not correct. Okay. Don't forget to mention this 2. To and buy will only be in the trading and PL account. For balance sheet, the format is little different. Okay. So when we will do balance sheet, I will tell you. So opening stock is there. Okay. With that, what you are going to write? 2 opening stock, then 2 purchase. Okay. So what I said, from purchase we deduct purchase return. So purchase return is given in the credit side. See the sum nicely. Okay. So purchase minus purchase return. Okay. And from sales, in the credit side, when you write sales, buy sales 25 lakhs, from there you are going to deduct sales return. Sales return is how much? 1 lakh. Okay. So 1 lakh is sales return. Next item is 2 freight you will write, 2 wages you will write, 2 factory lighting, 2 coal, gas and water. Okay. 2 carriage on purchase. Carriage on purchase, I told you, carriage on purchase, carriage and carriage inward. These 3 are same things. Okay. So you are going to write it in the trading side. But see, carriage on sales. This is one extra item which they have given to confuse you, children. Okay. Carriage on sales will never come in trading account. Okay. So you are not going to take this 50,000 for any calculation. Okay. Next, it is factory rent. Obviously, it will come. Factory rent will come. But see here, office rent. I told you all the factory related expenses are coming in the trading account. Okay. So office rent will come in PL account, profit and loss account. So now, right now we are doing trading account. So we don't require these 2 items. Okay. These 2 items are given extra, carriage on sales and office rent. Okay. So we are not going to take into notice these 2 items. Okay. And closing stock is given here at the end. Okay. So let's see the sum. What I said, opening stock you will do, then you are going to write purchase in the inner column. From there you subtract purchase return. Okay. And this side you write sales less sales return and buy closing stock. Okay. Finish. Credit side is over. Okay. Now freight you will write, wages you will write, factory lighting you will write, coal, gas and water. Okay. Anything else? Yes, one more item is there, that is carriage on purchase and factory rent. Okay. See, we have not written 2 items. Do you remember I have discussed last? What is that 2 items that we have skipped? That is office rent and what? Carriage on sales. These 2 items will not come in the trading account. Okay. Now what you do? How you do the solve? Solve the sum. Credit side, you do the total. Credit side is 24 plus 3 lakh, that is 27 lakhs. Okay. From there you add the debit side all the expenses. When you add all the expenses, then you subtract. Okay. And then you get the gross profit. Okay. Gross profit is how much? 10 lakh 52,500. Okay. So I think all have followed this sum. Next thing is there, students, one more formula you are going to learn here. Okay. This all formulas, you are going to need it in class 12. So this chapter is very, very important for class 12. Okay. So cost of goods sold. Cost of goods sold. It is, what is the formula? Opening stock with that purchase. What is this purchase? You remember, it is net purchase. Okay, that means purchase less purchase return. Then you have direct expenses. What are the direct expenses? Wages, carriage inward, these all expenses. Okay, and minus closing stock. When you do minus closing stock, then you get cost of goods sold. Okay, so with this we are coming to the next illustration, where we are going to calculate, prepare the trading account with the help of what? Cost of goods sold. Okay, so see here, question is given, don't get confused, it is given adjusted purchase. What does the word adjusted mean? Adjusted means purchase has already been, purchase return is already deducted from purchase. Okay, that is adjusted purchase. That means you don't have to deduct now any more purchase return. Okay, freight and carriage inward is given. Okay, done. Next you have, what is the item? This is freight and carriage outward. So this item will not come. Carriage outward don't come. Okay, wages is there, it will come. Fuel and power will come. Office rent, this is not coming in trading account. Trade expenses, this will not come. Okay, sales is coming and closing stock is coming. Okay, so now see how we are going to do. So now see, adjusted purchase. Adjusted purchase, how they have taken net purchase, with that they are adding opening stock and less closing stock. Okay, so that means here see, adjust, you don't have opening stock in the sum, you have closing stock, but closing stock has already been deducted, so we are not going to consider it for the second time. Okay, and opening stock is not given in the sum with which we start. Okay, so that means adjusted, in adjusted purchase everything has been done before. Okay, what is the formula of adjusted purchase? Opening stock with that net purchase. What is this net purchase? Purchase less purchase return. Okay, and minus closing stock. So you are writing here adjusted purchase, so you are not writing closing stock over here. Okay, closing stock has already been deducted. Next you are writing freight and carriage inward. Okay, but you will not write carriage outward. Okay, next you are writing wages, fuel and power. Wages, fuel and power. Okay, next you have office rent, this we will not take for consideration, and trade expenses, this also we are not going to take, only sales we are going to consider. Okay, so by sales you will write, now you will do the total. The total is how much? 30 lakhs. Okay, from 30 lakhs you subtract purchase, carriage, wages and fuel and power, you get the gross profit 3,80,000. Okay, so this is 3,80,000 is your gross profit with a new formula, that is adjusted purchase. Okay, so I hope I am clear till here. Another sum that you are going to see here is 3A. Okay, 3A is very easy. See here, opening stock they have given. Okay, purchase they have given in the sum. Then they have given expenses on purchase and expenses on sales. In every sum you are coming across some new items. Okay, so now they are asking you wages, sales and closing stock. Now they are asking you to calculate cost of goods sold. Cost of goods sold, just now we saw the formula, and then gross profit. Okay, so cost of goods sold, how you are going to find out? What is the formula of cost of goods sold? First you do the trading account. Okay, trading account, what are the things you have here? You have opening stock, purchase, this all you will need. Okay, expenses on purchase is there. Okay, expenses on sales we will not take. Next you have wages, then you have sales and closing stock. So let's move. By sales, by closing stock you will write. Okay, next it will be opening stock, purchase, expense on purchase and wages. Okay, so when you deduct from 6,52,000 these all expenditures, then you are getting 1,54,000. Okay, this 1,54,000 is your gross profit. Now they are asking you cost of goods sold. Cost of goods sold, we just saw the formula. With opening stock you are going to add purchase and direct expenses minus closing stock. Okay, so opening stock is there, plus purchase, plus expense on purchase, plus wages minus closing stock. Okay, so when you do, you are getting cost of goods sold 4,46,000. Okay. Now children, one more extra thing I want to tell you over here. See, if cost of goods sold is given to you in the sum, okay, and sales is given, then easily you can find out gross profit. Okay. Instead of doing this entire formula, you can use this. Gross profit is equal to sales is given to you in the sum. So from sales, if you deduct cost of goods sold, then you get gross profit. Then what is this ultimately? What is this gross profit? See, sales is there, and from sales, if you are deducting this cost of goods sold, these four items, then you are getting gross profit. Okay. So I hope this particular sum is clear, all of you. Okay, so we will keep till here. So practice these sums, okay, for your final exam. Only we have done today 3 examples. Question number illustration 1, 2 and 3a. Okay, so practice this at home. Go through the format anywhere you find problem. Okay, you are welcome. You can ask me any questions. Okay, so we are keeping here. Today we will continue tomorrow. Okay, with 3b.